Hi, this is you Michael. In this video, CA Foundation Accounting Inventory Valuation Past Year Question 2026 May 2026. Question number 5A1. The profit and loss account of Prabhat showed a net profit of rupees 15 lakhs after considering the closing inventory of 9,37,500 on 31st March 2026. On scrutiny of the books, it was observed as under. It means this profit is not correct. This closing stock is also not correct. We need to find out correct profit and correct closing stock, because these were the discrepancies. These were not considered while calculating these two figures. And what we are asked to find out, you are required to ascertain the value of inventory on 31st March 2026 and the adjusted net profit, means correct net profit, for the year ended on that date. Marks 5. So first we need to prepare profit and loss adjustment account. In this profit and loss adjustment account, we have to take this 15 lakhs as the opening balance, credit side, by net profit. By net profit, 15 lakhs. And after that, we have to consider each and every point one by one. Purchases for the year included 37,500 paid for new electrical fittings for the godown. It means they purchased some electrical fittings. That electrical fittings were wrongly debited to purchases account. How can it be wrong? Purchase of electrical fitting means that is an asset purchase. That should be added to asset. Electrical fittings account should be debited. Instead of that, purchases account had been debited. So unnecessarily purchase account has been increased. It means expenses have been increased. Because the expenses have been increased, profit has decreased. Now you have to increase the profit. For that reason, this 37,500 should be added back to the profit. How should you write? By electrical fittings. Now the second one, goods valued at 1 lakh were given away as free samples for which no entry had been passed in the books of account. When goods have been distributed as free samples, what is the journal entry you have to assume? Free samples account debit or advertisement account debit to purchases. When you write this entry and post in the relevant accounts, your purchase account will be reduced. But had it been reduced? No. Now we have to reduce his purchases account. But purchases account had already been closed by transferring it to trading account. Now what we can do? Since earlier the purchases were debited to trading account, now we can credit trading account with this amount, 1 lakh rupees. It means including this amount, purchases account had already been debited to trading account. Now it should be credited, but there is no trading account also now. Only alternative is to credit profit and loss adjustment account. So this pre-samples distributed have to be credited to profit and loss adjustment account by pre-samples. 1 lakh. And in our assumed entry, free samples account is debited or advertisement account is debited. That is expense. That should be transferred to profit and loss adjustment account again, because previously it was missed to be debited to profit and loss account. Now we have to debit. That is the reason again the same 1 lakh is to be debited to profit and loss adjustment account. Invoices for goods amounting to 6,25,000 had been entered on 27th March 2026, but goods were not included in stock. It means we purchased goods, we received invoices on 27th March. The goods have not yet been included, but these goods have been already included in the purchases account because invoice came before 31st March. The goods might have been in transit. So, purchases account had been correctly dealt with. It means we have recorded this amount in the purchases account correctly. But only thing what we did not do is we did not include this amount in the closing stock. Since it is not included in the closing stock, our profit was under calculated. Now we have to increase it. For increasing the profit, it should be credited here. And at the same time, since it is not included in the closing stock, we should add this to the closing stock also. For that purpose, we open separately a small statement taking the given amount, that is 9,37,500 as the stock, and we should add it. Purchases of March 2026 not included in the stock. So by doing this, creating here, profit had been corrected. Adding here, stock had been corrected. Next. In March 2026, goods 5 lakhs sold and delivered were taken in the sales account. Goods were sold, goods were delivered, but not taken in the sales. But we did not write it as sales. Since we did not write it as sales, our profit was under calculated. Now we have to increase the profit. How much is that? 5 lakhs. Sales 5 lakhs. Fifth one, goods costing 1,87,500 were sent on sale or return basis in March 2026 at a margin of profit of 33.33% on cost. What is this? Goods costing 1,87,500 means the cost of the goods is 1,87,500. What do you mean by goods sent on approval basis? It means goods are sent to the customers. While sending the goods, we write a journal entry, customer account debit to sales account. That is one entry. And we give him option whether to accept the goods or not. And we give certain time also, say 10 days or 15 days. Till then, it is a pending sale, not confirmed sale. Now, just before 31st March, means that is before the preparation of final accounts, we have sent certain goods. The cost of those goods are 1,87,500 on approval basis, and we have recorded a journal entry like customer account debit to sales account. But what happened? Though approval was given in April next year. These were recorded in the sales for the March. These were already recorded in the sales for the March. But these were not approved. Since these were not approved at the end of the year, that is at the time of preparation of final accounts, that pending sales should be cancelled. For cancellation, sales account should be debited. Instead of debiting sales account, we debit profit and loss adjustment account because already sales account was closed. So debit side we have to write. But how much we have to write? At what price we have recorded regarding this amount as sales, we have to understand. Recall it once. The cost is this. The sale would be more than that because we added 33.33%. 33.33% means 1 by 3 in simple terms. So 1 by 3 on cost. This is the cost. On this 1 by 3 was added to the cost. After adding, we will arrive at a sales figure. So what is that 1 by 3? Working. Cost is equal to 1,87,500. Profit is equal to profit or margin. Profit margin is equal to 1,87,500 into 1 by 3, 62,500, 2,50,000. So like this we calculate. This 3,50,000 is the sale price. This is CP, this is profit, and this is sale price. So we had recorded this transaction as sales at 2,50,000. It is a temporary sale, pending sale. That sale should be cancelled. Cancellation means debit side. So sales 2,50,000. Otherwise, like this also you can calculate. How this came? I wrote here like this. See, for example, here cost, profit. Profit is 33.33. Cost is 100 because here 33.33 on cost is given. On cost means that cost should be taken as 100. And the ratio of these two is 3, 1. 3 plus 1, 4. So now cost equal to 3 parts, sale equals to 4 parts. That's why you can take like this. Cost divided by cost parts into sale parts, or cost divided by cost ratio into sale ratio, 4 by 3. This way also you can calculate. So after calculating like this, What we have to do? Simply take the balance. Take the total of these. You will get 29 lakhs 50,000. Here also 29 lakhs 50,000. Now balance is this. This is adjusted profit. This is correct profit. Now the calculation of inventory is here. The inventory was given 9 lakhs 37,500. This was already explained. And these goods are sent on approval basis, and those were not considered as sales. Therefore, those goods are our goods. We should consider them as our stock. That's why it should be added to the closing stock. So, correct closing stock is 17 lakhs 50,000. This is the way you have to calculate. If you like my video, please subscribe. Thank you.